Everyone, hope everything is going well. Tomorrow is Martin Luther King Day, and Donald Trump is going to be attending his second inauguration. And, I'm not here to get into a political discussion. I want to analyze markets in an unbiased point of view and, take my own politics out of the situation. A lot of people, they get very charged, very emotional about that. But when investing, you have to take the emotions and your own political biases out the window. That's just my opinion. I know some people will disagree with me on that. I wanted to look at, okay, how's the early part of Donald Trump's, excuse me, how will Donald Trump's uh, term be? And my thesis has not changed about an economic slowdown. Granted, my timeline has been off. Now, that being said, I have not liquidated all my stocks. There's a process in what I'm doing. I haven't sold all my crypto yet, and I'll explain why. But now we're in blow off top phase. But what's crazy is the dollar index is 109.06, and you see the stock market going up. The stronger the dollar becomes, the more issues that we will see, in my opinion, in the stock market. Now, if the dollar goes down, I expect the stock markets to rally initially. And we could see, some people are talking about highs about 6,300, 6,400. I would not be shocked at that. And I have to look at the evidence presented to me, not what my own thought process was, a couple of years ago. I thought, 2024 would be the year of the crash, 2025 early, but it's been a little delayed. Now I'm looking over here at Dale Pinkert. He reposted this by questioning mine. He is I think, a retired Forex trader. And he thinks that bonds will rally if you go to March, a very strong move. If bonds rally, I expect things to go bonkers. Crypto coins, you could even see gold stocks go up, the whole nine yards. And, I'm slicing and dicing all this information together. So, what could be the catalyst? This is just a technical chart pattern, just from a fundamental analysis perspective, because I'm a more of a fundamental guy and I like looking at, hey, when do fundamentals meet the technicals? And over here, I'm going to, what's his name? Finance Elot. He's like a doomsday type trader, kind of like me. And I found this interesting. The Fed is preparing to begin repo again. For those that don't remember, the repo crisis blew up in September of 2019, a few months before the top. And you saw the stock markets going, berserk. So why will they be doing this? Bank of Japan, if you notice, their interest rates, they're starting to go up. Their bonds are selling off. So that's a red flag in my situation. That's just a red flag in my opinion. But then he's talking about what I've been talking about a lot in my videos. And it's about mainly reverse repos, but I wanted his perspective on this. And the repo crisis is different than reverse repo. So keep that in mind. Repo is when Fed steps into overnight lending market for banks and provides liquidity. Okay. That was a crisis September 2019. That was a red flag. Okay. And reverse repo is where money market funds can put their excess liquidity in the Fed for a risk-free rate of return, no crisis. Okay. And the reverse repo facility you have a lot of things going on. Like the Biden administration is handing over, in my opinion, the new administration a lot of headaches to occur. Let's type in reverse repo facility. Okay. And I know a little bit about the reverse repo facility because I do accounting for reverse repos. Not that much on a daily basis, but that's part of my job for the firm that I work at. And I remember it's quite hectic in March of 2023 when, the Silicon Valley Bank situation's going on and all that. So all of these reverse repo or the reverse repo facility in December of 2022 was 2.5 trillion. Ironically, that was right around when MicroStrategy and Coinbase bottomed out. And people could have made a fortune off of MicroStrategy and just sold it like, this week. It is ridiculous how much money people could have made, and it split what, 10 for one. And his definition, I think he explained it well, is reverse repos where money market funds can put their excess liquidity in the Fed for a risk rate of return, no crisis. So what happens when the money market funds don't have excess liquidity? Okay. Less money flows through the system. That's what it means because all this money was leaving the reverse repo facility into the markets. And I showed you a somewhat of a correlation here, where if you look at December of 2022 to like just a few weeks ago, there's like 87% correlation with crypto and reverse repos. And the stock markets also did phenomenal the last few years. I'm just looking at it and I'm like, okay, this thing's going to zero. And then on top of it, that's reverse repo. Now repo, they're starting repo again. There is a lot of trouble underneath the surface, not to mention what you're seeing right now in the dollar index. There's trouble beneath the surface. Now, markets can rise if the dollar goes down, but you haven't solved the underlying issues out there. And we had a few good months after September of 2019, but you can't bandage that situation unless, you're printing lots of money, you're having a lot of corporate tax cuts. And I don't think Trump will be able to enact that right away. And what has not occurred is, the commercial real estate issues have not been solved. So I'm just looking at all of this, putting the pieces together, and then not to mention money supply growth. I'm going to be putting a money supply growth video in the coming, I think, weeks ahead, Global M2. And Global M2 has been propped up by China. All right. The United States money supply has not been growing. If China slows down, while even their market, suppose their stock market goes up, the next few months, okay, fine. But if their global money supply starts to lag, we have problems. And I'm seeing a lot of issues out of China right now. So if China doesn't get their act together in terms of money supply, whole system tumbles, in my opinion. It doesn't matter if Donald Trump is in office because, look, China does the heavy lifting when it comes to the money supply. They account for 40% of the money supply. Watch my video if you haven't seen it. Okay. Watch, that video, the reverse repo videos, and all of that. But my strategy is, with the profits, keyword profits that I make, I'm going to be buying more longer term put options. That has not changed. And this has just been a process where, hey, look, yeah, making money, that's great. But, protect myself from downside risk. And I've always gotten burned by not buying downside protection during, a crisis. And I think this crisis is going to be a little more different than the ones we've seen, in 2020. We bounced back after COVID. But there seems to be a lot of issues underneath the surface. Like I said, commercial real estate is one of them. And this finance a lot guy talks about Japan and their interest rate. So he thinks the yen carry trade is going to unwind. And when the yen carry trade unwinds, where's the liquidity coming from? If liquidity is not coming from, and I'm talking about later this year, no more reverse repo liquidity. Liquidity is draining from China, less money supply growth. And then the yen carry trade starts to unwind. Yen starts to get stronger. We have a lot of problems on the surface, in my opinion, but I will continue to look at what the market presents me in terms of evidence, and I'll go from there. Anyways, let me know your thoughts. Talk to you later. Bye.